Trading carries a high level of risk. Anything discussed on this YouTube channel is purely for educational purposes and my opinion. Please backtest anything that I teach before taking it to the... What's up, guys? FX Chopper here again. We're back on the charts. I want to go over this trade that I initially I took. So when I took the trade, I think early on this, I think it was like Tuesday, I took the trade. I was initially watching out the market, seeing from my initial strategy and how I trade. I'll be going over some of that in the video here, in accordance to like order blocks, imbalances, inefficiency, breakup structure, order flow, a little bit of everything I'll be trying to tap into in accordance to what I was thinking, how I took the trade and everything. I'll show my screenshot of me taking the trades and stuff like that. I actually got like a pretty good entry. The first entry was my risk entry, and then the second entry now was my initial confirmation entry. I'm telling you guys, chopping these markets like we chopping these markets, guys. So here what now. I'm gonna run the intro. And then we come back and see what I'm talking about. Alright? Run it.
I'll keep hustling.
Alright guys, so here we are on the charts. Now, one of the things that I use is, like this is like a reversal pattern for me. A lot of, from a retail perspective, you're gonna see this as a head and shoulder pattern, this being inverted head and shoulder rather. This being the first shoulder, this being the head, this being the shoulder. But I'm not trying to enter when it breaks the neckline up in these areas. I'm trying to enter down her. That's what I'm saying. I want to be in this trade from here or from even here. I'm not trying to be in this trade when basically everything almost finished. You see what I'm saying? So it's understanding market structure for me. So what I do is I look for points where market broke structure with high volume, and then delineate why or put reasons into why a specific point is a valid point to buy from. So let's kind of get into what an order block is. An order block is basically my entry points. They are my POIs. They are my entry points. They're awesome. So an order block is basically considered the last down candle before a bullish move that broke structure. Right? That is what we call a bullish order block. Let me confirm. That is a bullish order block. And a bearish order block is the last up move before the bearish move that broke structure. So I'll be showing you what it is, and I'll also be showing you how I took a trade using an order block and everything like that. It's the same concept of supply demand basically. It's understanding a point where price push from heavily, the price is expected to retrace back into that zone. And guys, just kind of open your mind a little bit when you hear me talking about it. Because I know a lot of persons watch a lot of videos on order blocks and stuff, and to be honest, I learned most of the stuff that I learned from what's this thing called again? YouTube. So I'm not really that type of person. It's like I'm not like I'm cheap or anything. It's just most of what was being taught in courses and stuff like that never really kind of, I don't know why, I felt like I needed to learn on my own, and that did exceptionally well. I watch videos, Ment FX, Psych FX. These guys are pretty good guys. You can go check out their channels. I'm telling you, like, if you really want to kind of get to the next level, you wanna check out these guys. I might put their links, their video thingies in the link below. If it is that you want to see their videos, you can also drop it in the comment. But anyways, our order block is the last down candle. In this case, we're looking for a bullish order block. So it's the last down candle before the bullish move that took structure. If there is no last down candle before a bullish move that takes structure, it's not an order block. That's all it is. The order blocks are not always entry points. They're potential points to sell or buy from. Like in this case, we want to understand the flow of market now is bearish, right? So if you're looking at this market, you're seeing obviously a bearish market, right? Now obviously when retail traders see this, they see a break and retest, which they could have entered, but they would have entered somewhere up here because what? They're looking for maybe an engulfing candle, somewhere around here, like a nice bullish engulfing candle to kind of confirm their entry. I'm going to show you the difference with order blocks and then like retail type concepts. So like while they're trying to enter the trade when it bounced by the trend line, you know, I'm not just looking for the bounce on the trend line. I'm looking for a wick that comes in here, and they want to see it close above the trend line. So they might even look for a nice little pin bar again. So something like this, a nice little, you know, pin bar type thing. I'm not very good at drawing these things. Okay, so in a nice little bullish pin bar or a bullish engulfing, and their entries, you know, more than likely is going to look something like above these areas, stop loss below these lows. And I'm not trying to have my entry look like that. And then you have even entries where entries there, stop loss below these lows. Now it's pretty good, but that's a 74 pip stop loss, guys. I do not use more than 10 pips. I never trade a trade that does not give me a 10 pip stop loss. If the trade does not give me a 10 pip stop loss, I will not take that trade. That's just it. It has to be 10 pip or less, right? So anyways, it's the idea about getting price, why would I, you know, and if I'm entering a trade now, I'm looking to enter it all the way down here, right? With a stop loss. My stop loss is more than likely gonna be the same place, but this one is a 74 pip stop loss. The other one is a 74 pip. The other one is where's the other one? 56 pip, right? And then my entry now, we're looking around these beautiful points for a 20 pip. Now I'm getting the same risk to reward, meaning I'm getting the same reward, I should say, which is, well, not the same, but I'm going the same take profit point, 158 pip, 102 pip. That's the difference, guys. It's getting the best possible points to enter from. As per my gun tool video that I was expressing the other day, you will see how I use it to kind of, you know, take trades. So just as I know, if price is up here, I'm not looking to trade it. If price is on, if it's down here, I'll be looking to trade it, yes, but I still want it to go to the best possible price also. If it doesn't go to my point, then that's fine. I'll miss a trade. I'll rather miss a trade than to take a loss stupidly, especially if it is that there's reasoning behind why it needs to come to these areas. Now while you're going to be in drawdown all the way up here, I'm taking my entry down here. You know, so it's like, that's just the understanding of it. You know, it's really understanding the flow of market itself. So we're gonna go into the charts and kind of show you what I'm looking at, you know, initially, like in this area right now. So remember, I was saying it's the last down candle that breaks structure. This is the initial structural point, by the way, guys. So you're looking at this is the last down candle before, and you see this is very nice impulsive move to push up and breaking above these structural points. Now grant you got a nice little retracement, yes, and if you look at it again, you know, to be a little bit more precise, you can see where you had your initial break of structure here again. So you could have gotten a nice little scalp of this last up candle. See, this is the last up candle before the bearish move. This is the bearish move that broke structure, and this is how I'd use the gun tool, guys. I would draw the gun tool from the high to the low, and I would just say, hey, if price is not in these areas, so if price doesn't pull back to these areas, I'm not looking to take profits. So you know that, you know, if you get your entry on the 50% area, your stop loss, see your stop loss would have been, say, about there for 10 pips, and then your take profit, you could be targeting this order block right here for a nice little 30 pip. That's it. You don't want to kind of go extra with it, because you see the market obviously broke structure there, so you don't want to be expecting anything but bullish movement, and you know, that's just it. So anyways, let's get into the trade that I took. I don't want to be ranting too much. I get too excited about this shit, so let's get into the video. My first entry actually was somewhere on this week, by the way, guys. Again, I'll be showing it on the screen, well, just about now, I guess. Yeah. So where am I? So seeing that if it is that I'm expected to buy this, I can't just buy it just because it's hitting the zone, right? This was a risk entry. This was do not recommend doing risk entries, by the way, guys. I do not recommend it. So for me to really be looking for buys in this area, I need to see price break above this structural point, because if you really look into it, what this price been doing, price has been coming down very bearish, you know, initially giving you nice little bearish pullback. They're not very strong, but you're giving you little bearish pullbacks, and now you want to see this same, Jesus peace, you want to see this same pattern play out here, right? So what you want to see is you want to see price break above this, So I waited, and I kind of remember, you're not buying it yet because you didn't get a breaker structure. It needs to break above this, right? This is the last structural point for you to decide that, hey, yes sir, I'm ready to buy this. Now that's a break of structure. The candle wicking above it right there is not a break of structure for me. It has to break and close above it. Yes sirree. Then you have to understand right here is a nice little area to sell from. This is what we call a supply zone or a bearish order block, right? So you'd now be, if you want to short, you'd be shorting in these areas. You would be looking for your shorts in those areas. But if it again doesn't have to, no problem. Now this is where I was really looking for the my initial buys, and my targets would have obviously been up to these levels at first. So this is how I marked it out. I initially marked out this right here to there. This is the last up candle, this little candle right here. Let me get my little arrow too. This little thing right here is my order block. So I need to see price pull back within this. Now remember guys, when I said that I don't use a stop loss that is more than 10 pip. Now when I put it right here, my stop loss needs to be below here. That's not pretty cute. That's 17 pips. So I couldn't take it there, hence why I used the 50%. So right here, and then to the 50%, I'll get my nice, beautiful. Why is this not going to? You know what? That's just pretend so that a 10 pip. Anyways, and then my first take profit initially would be here for 54 pip. And we just know, oh yes, and using the gun tool, you normally draw it from the low to the high, like that. And now that I'm in this area, I could potentially have bought here, or I could potentially buy here. So if I had bought here and taken a loss, not a problem. I still know that I'm in an area to buy. The only time I can decide that this buy is no longer valid is if it breaks and closes below this area. If it does not do that, then we're Gucci. Now it tapped into my entry point perfectly. Wick entry, guys. I'm gonna try to see if I find the screenshot for this one also. I've been looking for it. I don't know where I did with it. But yeah, so my take profit was hit pretty easily, pretty quickly. You know, we got a little retrace back down in zone, but we never went negative because we had entered all the way there with a 10 pip stop loss. A nice 5-to-1 trade, you know, pretty simple. I didn't close out the trade though. So because one of the main reasons was initially again I had marked out from, you know, taking that off. I had then seen another break of structure, which was, you know, marking out this area from this high. You can get another break of structure right there, and then I'd mark that. So we're looking for potential entries within these areas again, you know, to see if it is that we can find reasoning behind it. I notice sometimes these lows get run, you know, points that did somewhat, like when you see candles do this like kind of liquidity grab type thing where you just dip down and shoot up like that. I see them getting run a lot, you know, but I don't know. So yeah, you know, again I was expecting price to kind of come down to these areas. You know, you see that huge rejection right there. So I was really expecting price, because remember I was telling you guys that once you have the gun tool, you draw it from your low to your high. And you know that once price comes anywhere in this box it can buy from, you know. But I was still holding the trade. I held the trade till about, where did I hold the trade? I think I held it up to this level right here, I think. Yes, no, it was right here actually. Yes, it was 106 something. 100 and I think it was about 105 pips. Yeah. Somewhere about here. Just say about there I held it too. I had closed out most of my positions here though, and then, you know, I was just letting the rest run. I was going to go, you know, completely bullish with it, like I was just gonna let it run completely, and if I did, well, just know the moolah would be coming in. Look at this, where market is at now. So just the same, I'm looking at this area right here now currently to see if we can see a small sell off. I don't think it's going to sell off too much. I think it's going to, even if it sells off from here, it's not going to sell off too much, because remember I was telling you in one of my videos, guys, is that the job of a low is to take out the high, and this low took out this high, and now that price failed. Basically price this low, this high right here, failed to take out this low. The fact that it failed to do it and go bullish, you know, we're kind of expecting higher prices. So you know, we can expect price to even just continue bullish. We don't have to, we can get a smaller trace, maybe around little 30 pips. But for me to really sell this currently, if it dips in the zone right now, I would need to see it break below this, unless it creates another structural point. So what we can see happening is price can tap into the zone right there. We can see it maybe create a structure, tap up more in the zone, break back below that structural point, pull back to there, and then we can see a sell-off. And I wouldn't expect a sell-off too much, like a really big sell-off. You know, if I'm going to sell this off, I'm going to use my gun tool, my beautiful gun tool from high to low, and just pretend that this is the high to low. If I'm entering a trade, I'm not trading it more than this. Like my stop loss, my beautiful 10 pip stop, pretend that that's 10 pips, and my take profit is going to be there at the 50%, and maybe even here just to be safe. Like I'm not, that's how I trade, guys. I don't trade a specific session. I'm gonna be straight with you guys. I don't trade a specific session. I'm not a person that is gonna get up for London session, New York session. Like if I see a setup, I'm gonna take that picture, even if I'm in the lowest volume market. I don't give a shit. Sometimes you just have to understand, guys, you have to find your edge, find your way to trade. If you don't have your way to trade, then you're just going to keep watching videos. Like I'm gonna be straight with you guys. I've been in a stage where I just kept watching videos over and over and over and over again, constantly thinking I'm just learning more when I already had an edge. Is the way I think. I think logically, and I made that my edge. I'm not out here selling a course, and I'm not going to sell a course either. Whatever I talk about is purely what I just really do like to talk about, trading and stuff like that. So, and that's why I'm making these videos. It's almost like video, like journals type thing that I'm making, you know. So I'm not here trying to get subscribers and get views and stuff like that. It's really just me uploading these videos. I would like to, for you guys to subscribe, because I would love people to see how I trade, but not because I, you know, I want you to subscribe for my content and go buy a course or nah. I'm doing this because I actually like doing it, and I really do like feeling like I'm helping somebody learn some new shit. You feel me? So genuinely, guys, whether you subscribe, genuinely I would appreciate it, but it's not here nor there for me. I genuinely just want you guys to try to see where I'm coming from, and I'm making these videos. I may be not exactly how you want it to be, but the market is how it is. You will not be able to ever say the market will do a specific thing and it will every single time. But you can put the probabilities in your favor by delineating what could possibly happen. And if that specific thing doesn't happen, then don't trade it. It's like this. If this happens, then I do this. If that happens, then I do this. But if this doesn't happen and that doesn't happen, then I don't do that. And that's really all it is. You're trying to put things in your like reasoning behind why you do what you do, why you trade the way you trade. Because then when you do that, you start to create consistency. You know, create consistency on a level where you're always, you know, even if you have a 50% win rate, guys, 30% win rate, you can stay profitable. I'm telling you, it's about this thing. This stop loss looking thing right here. It's about how you set that, where you set that, why you set that. You can understand that you take one trade, right? And if I say I just did this as a risk entry and I take a loss on it, I'm losing 9 pip. Right? But if I take another trade, 10 pip I should say. If I take another trade right now, then what am I losing? I'm only losing like what? Again, another 10 pip. But if I take one more trade and I win, I make back that 10 pip plus 30 more. Back in profit. I'm up 30 pips. And then you take another trade, you take another win or a loss. You're down 20 pips. You take another win again. You're now up what? 40 pips. The point is, it doesn't matter. It's just about you understand. I'm gonna make a video on that actually. You know, I feel like I'm gonna make a video on that. You know, I feel like I'm gonna make a video on that. I know what. Fuck it. I'm gonna make it in this video. The point is, met this. Zine, met this. Imagine the zeros them are losses and then the ones are wins. Zine. What most traders tend to do is this. This is what most traders tend to do. They take a win, they use a standard one lot size to take a win. Then they're like, oh, I feel nice. They're confident. Then, and I'm thinking about risk management and, you know, systematic trading, making your trading mechanical and stuff like that. Take a next swing, yo, jump in with a nice standard 6. You know, like boom, no problem. You know me, I got this. Jump in again with a nice standard 5. You know what I'm you see, once you get 3 wins in a row, sometimes winning a trade is bad for a trader. Because when you've taken all these wins, you now are increasing your lot size to try to make more money. That's how greed comes into play. Trading is supposed to be a systematic process that you do to be able to capture and take money from the markets. Like, it has to be systematic. The reason why it has to be systematic is because you're doing the same thing over and over, just constantly doing the same thing over and over. Not changing it up, not trying to make it any type of thing that it isn't. Right? So that's what you have to see. So anyways, you take 3 wins here, you're up a standard. So you're up a standard. Say you took a standard 1 here, a standard 2 here, and a standard 5 here. You're up some nice little money. Now you're here up, and then you just drop on a standard 10. Boom, big loss. Then you'll be like, oh shit, revenge trade again. Boom, bigger loss. All of this you just make gone. Boom again, bigger loss. Trading a fuckery, you can't bother with it, this, that, whatever. You see me? Then I'm getting a little bit into patois, guys. You know, for anybody that is watching my videos and I'm talking too much patois, I'm Jamaican. I am very Jamaican, so a lot of the times my videos will have a little bit of patois in it. Anyways, so yes, you have this, you have another win again. Then you'll be like, okay, finally let me get back on track. Let me just try and make back all that money I just lose a while ago. Then boom, big loss. You drop in a big lot size. You probably blow your account and take a next race and blow your account. The idea is, you know, guys, is that if it is that you don't have a systematic way to trade, it doesn't make sense. That's all it is. Systematic way to trade. A reason behind everything. Put some logics in your trading. Why does it need to? Right? Like right now I'm looking at this. Let me remove all the drawing off my chart because I feel like I just be here. Like right now I'm looking at this, right? Why do I think the market would sell? I haven't talked about imbalances as yet, but there are a lot of videos out there about imbalances. I don't even know if I'm gonna get into it. But the idea is that there was a shit ton of buying being done in here, but not much selling. And think about it, guys. If it is that you're selling something, you should have somebody there to buy it, right? That's the idea of what an imbalance is. So price needs to come back to these areas. This area also imbalance, right? Look at this. Just gonna show you how price imbalance when it was imbalanced right here. There was imbalance right here, and then look how price just came back inside of this initial imbalance, all of it, and then shoom, went up. So it came and cleared out all the orders that were all of the initial orders that were here, basically to kind of make the market efficient. Then that's why it retraced back into it. So like just the same, we can expect that. Now when we look left, we can see here, this is our last up candle before this initial breakout structure. We can see multiple structural points are broken here. You know, we can see structural points are broken, right? And just to confirm when a structure is broken, is this is a breakout structure right here. It's from this candle to this, but then price came back again and break below it here from here. So you get your breakout structure. So that's why I'm looking at this area as a possible point to sell from, because it sold off so strongly, right? And then there is a little bit of imbalance. So think about it, guys. Right in here, we have a small amount of imbalance from this week high to this week low. So this is our imbalance field right here. So we expect price to at least dip into this before it go bearish, right? But we're not gonna just sell it as soon as it come inside it. You know, we're definitely going to kind of wait for a confirmation. Yeah. So you see where price is at now. You know that price kind of needs to kind of come within these areas. Like you want to see price kind of, come within these areas, right? And then we have a little equal high forming right here. We might see this candle kind of close bearish, close below the zone like this, giving you this little equal high right there. You might see that, and then when you look into the market kind of retrace, look at it, and boom, or maybe I went too high with that. Let me pull that back. So maybe you see just dip above it, take out that, then boom, I want to see break past that, then pull back, then sells off. That's basically what I want to see play out. If I don't see that playing out, I ain't taking that trade. Simple. Yeah, man. So that's it, guys. I feel like I rant too much on this whole thing. Like, I feel like I've been talking for about 40 minutes, and to be honest, I don't care. I'm gonna upload the video still. Like, I want my channel to be about how I want it to be, so I'm not even gonna be trying to make all my videos short. If you guys wanna watch it, then that's totally fine. As I said, I'm dropping these videos on the channel for you to basically understand why I do what I do. You will be taking losses in these trades. There's a lot of shit that will happen, but you have to just be able to put probability in your favor. That's all trading is, putting probability in your favor to delineate or to understand whether or not you want to be a buyer or a seller. And right now, because of how overextended AU is, I want to be a seller, because ain't nobody want to be buying this shit at this price. At least I don't want to be a person that is buying this at this price. I'd rather sell it if I see, that is, if I see a confirmation. If I don't see a confirmation, then I will wait for price to break above this, see what happens when it breaks above this, and then wait to be a buyer down in these areas, or anywhere where I can find a point to buy from. But I ain't trying to buy this shit, not now anyways. Right? Again, guys, as I said, like, share, comment, subscribe. I know this was a very drawn out, long ass video, but I just really wanted guys to kind of get a flow of who I am. This is how I naturally talk. This is me being completely free, not talking English or Potom, but just mix them up anytime. So again, guys, I don't have a course, and I'm not doing a course or anything of the sort. So I'm just doing how I trade. This channel will just be about how I trade, what I do in my trades, and all that shit. That's it. Alright? See you in the next one.
I'll keep hustling.